What's up, everyone? It's Scotty with Money Investing. In this video, I'm going to break down the top defense stock, which is going to be Lockheed Martin. They reported their first quarter fiscal year 2023 earnings this morning. So I'm going to break down what the numbers were, the growth itself, the revenue, the earnings, the cash flow, the valuation, the intrinsic value, and of course, the technical analysis as well. If you guys enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. If you're interested in joining us, Lockheed Martin is hitting a new all-time high pre-markets, getting up to as much as $499, almost $500 per share pre-market, as you guys can see over here. And we're going to be talking about what they reported. So again, make sure that you drop a like, subscribe, link to our Discord and our Patreon down below, 16% annual discount that does expire at the end of this month. So we're going to circle back to the intrinsic value calculator, but first things first, Lockheed Martin beats Q1 top and bottom line estimates, reaffirm fiscal year 2023 outlook. So in revenues coming in $15.1 billion, beating estimates by $90 million and increasing about 1% year over year. And non-GAAP EPS coming in about $6.43, beating expectations by 37 cents, and cash from operations of $1.6 billion and free cash flow of $1.3 billion. Outlook in net sales, which we'll also talk about, coming in at $65 to $66 billion versus consensus of $65.67 billion, and diluted EPS forecast of $26.60 to $26.90 for the company, free cash flow over $6.2 billion. So right off the bat, if we do some very simple analysis on Lockheed Martin, market cap's at $125 billion. So 125 divided by 6.2, it's trading at 20 times free cash flow right now. If you take the sales number, which is going to be $66 billion, we're trading at a little bit under 1.9 times sales. If you take a price, which is $500, just to round up a little bit, divided by $26.90, trading at 18.5 times forward price to earnings multiple for the company right now. But we're going to circle back to the valuation in just a minute. But these right here were the numbers. Again, as reported, earnings before income taxes here coming in just under $2 billion. Once adjusted, non-GAAP earnings came in at just a little bit under $2 billion, which are slightly lower from same time last year for the company. This right here, once again, the outlook, $65 to $66 billion, $7.2 billion to $7.3 billion is going to be their business segment operating profit. And the diluted earnings per share guiding for $26.60 to $26.90 for the company, with free cash flows over $6.2 billion. So net sales, slight increase, 1% year over year. Gross profit also growing from 1.9 to over $2 billion. Operating profit also growing from 1.93 to over $2 billion. This is one of the best defense companies, makes the most popular fighter jets, F-35s, F-15s. These have been around the industry, and they're pretty much considered the most dangerous jets, aircrafts on in the air, right? Pretty much if you are in combat, fighter jets, F-35s are literally the, just the best ones and the most dangerous ones that most countries use in their space, in their military programs. But net earnings here, 1.7, dropping down to 1.6 billion dollars, and effective tax rate was 15.3%. So even though they did have a little bit of a lower tax rate, we had more operating income. The expenses, interest expense was pretty hefty, $202 million. And that as a result did lower their earnings before income taxes. And then after taxes, their post-tax net earnings or net income was also lowered a little bit. Earnings per share coming in at 663 and diluted 661 for the company. A share count did actually go down to 254 million shares, down from 265. So again, they're consistently buying back shares every single year. This right here is going to be their revenue growth from 2013 from $45 billion to over $66 billion. They're expecting slight increase in revenue year over year this year in 2023. And gross profit also going from 4.6 to over 8.3 billion. So they have almost doubled in gross profitability, and operating profits gone from 4.6 billion to over $7.4 billion. Again, profitable business. So net income's gone from 2.9 billion to over 5.7. And like I said, diluted share count has gone from 326 million down to 264 and now down to 254. So they have been consistently buying back shares over the last several years. So if you do some very simple math, 326 going to be plugged in over here down to 254. And that number is coming down from 2013. Let's do some math here. 2.46% compounded annually. So we're going to plug in 2.5% here. That means their share count is going to go down from 254 something million down to 220 million shares by the year 2028. Now, in terms of valuations, like I said, on a forward basis, they are trading at a little bit of an expensive number, considering it's Lockheed Martin that we're dealing with. 18 times earnings. We got price to sales already at under 2. Price to cash flow at a little bit more on the expensive side, over 15, 16 on a forward basis, trading at over almost 20. And enterprise value to EBITDA at 14 to 16 times for the company as well. Now, balance sheet's not the best because they do have a lot of debt, $16 billion worth of debt with very little cash of $2.5 billion. So net debt is positive at over $14 billion of net debt. So the company has got more debt than less cash. Current ratio and quick ratio are good at over 1, but debt to free cash flow extremely high at over 12 for the company. So it's going to take a little bit over 12 years. Although if you take a look at net debt at 14.1 billion and free cash flow expected at 6 billion, I'm pretty sure this number is not up to date, because then if you do the math here, 14 divided by 6, we're looking at under 3. So debt to free cash flow on a forward basis is under 3. Current ratio is over 1. Quick ratio is over 1. But cash to debt ratio is not over 1. So net debt is definitely positive. So that's not the best news. But if you take a look at their growth, they are expected to grow earnings from $26.71 to as high as $28. So they are growing, but at a very, very, very small rate. So this is more of a value stock, right? It's really not a growth stock. It's very much a value stock, and it does actually pay you dividends of over 2%. So the company's got dividend yield of over 2.5%. So we're going to actually use a discount rate which is lower than 12% than our usual norm, because the company does also pay you a dividend of over 2.5%. So the growth rate right now, 2671. Let's just plug that in all the way up to 2811. And that's going to be going from 2023 all the way up to as much as 2027. So we are working with a very small 1.29% growth for the company. So I'm going to plug in, let's just do 2% growth for the business. Now, the P multiple, anything over 2 is obviously going to be extremely high PEG ratio, but we're going to have to deal with it because the growth rate is really, really low, right? It's more of a value stock. It's really not that of a growth stock. I mean, it can really fit sort of a part of the diversification strategy, because it is a defense stock. It does pay you a dividend, and it's very much a value stock. It's a necessity, right? Countries are going to continue to buy from Lockheed Martin because it's a necessity. It's not really a discretionary product or anything like that. It's B2B and really just B2G, which is business to governments that they're selling to. So if you go with, let's say, 15 times P multiple, we get a discount rate, or we're going to plug in 10% because of the higher dividend yield and 10% margin of safety. We can come down to a fair value of $273 per share for the business. And right now, of course, trading at $4.99 represents significant downside potential for Lockheed Martin because of the valuation, and really the growth not being there is the big challenge for Lockheed Martin. So even if you go, let's say 18 times earnings multiple, even then, I mean, it's trading at $327, right? So we're going to have to go even lower in terms of that discount rate just to bring it above $340, $350 per share, even after the share buyback. So it is definitely a little bit more on the expensive side when it comes to Lockheed Martin. So it would need to drop quite a bit. And this is going to be that sensitivity grid based on different growth rates and different P multiples. You can do the analysis and, kind of look for yourself, decide whether this is a stock that's worth your time or not. For me, if it's for a growth company, if it's a growth stock or a growth portfolio, Lockheed Martin's a hard pass. But if it's more of a defense, value, dividend, you know what you're getting yourself into with Lockheed Martin, then yes, it absolutely does make a little bit of sense. But of course, still not at these prices, not at these levels, considering that it's pretty much trading at all-time highs with, I would say, relatively speaking, a little bit of a higher valuation. So this right here is going to be the technical analysis from March lows when it was trading at 216. It has rallied a little bit over 127%. You don't really see that for a defense stock like Lockheed Martin, but because of Russia's invasion of Ukraine, because of a lot of different things, it's more than doubled from those prices. And of course, this right here was the month October of 2022 rallied 26%, and then if you come back to February. February of 2022. It's during that time it rallied a little bit over 46% as well. So lots of momentum during that time for Lockheed Martin. So we're approaching a resistance here at close to $500. That's pretty much the all-time high, and support level is going to be staying put at this higher low, all the way down to as low as this higher low. And those both opportunities will represent some degree of a potential swing trading idea for Lockheed Martin. But for me right now, it's going to be a bit of a hard pass considering the fair value is a lot lower than where it's trading at the moment. So let me know in the comment section down below, what do you think about Lockheed Martin? Are you buying, selling, holding? What are your thoughts? What are you doing with the stock at the moment? Let me know in the comment section down below. Earnings were good, strong beat on revenue, reiterating guidance, but it's just about the valuation, the growth rate, which is the future, looking at very, very, not the best at 1% growth rate. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below with a 16% annual discount available till the end of this month. As always, happy investing, and I'll see you all in the next video.